Well, good weekend, all. I'm Epstein, and here we are with your metal market wrap-up, your weekly edition. So we'll be looking at weekly charts, and it is December 8th, Friday, 2023. Well, we saw quite a day today, and we have a lot more coming at you. This week coming up is full of information. You got CPI on Tuesday, the Federal Reserve on Wednesday. You got the European Central Bank, I think, Thursday, the Bank of England coming out with their decisions on Friday, and then the week after, Bank of Japan. And then we start getting ready for Christmas. So you got 2 weeks of solid trading, and then we get into that Christmas parade, if you call it. Today was a game changer day. The market saw an extremely strong jobs report. So the ideas for traders, because we were on a euphoric roll. I don't know what people were smoking, but they had gotten to the 0.5 interest rate cuts. And I started hearing people say, could we be talking 6? I swear to you. And I'm going, what the heck? They had all had the Fed caving in and just throwing in the towel because we're going into a recession. How do you go into a recession when you got 3.7% unemployment rate? And if you've watched unemployment rates, they don't just go jumping crazy. I mean, to get to 4 will be a trick over the next 2 months or 3 months. Got that? So how do you get then starting the first quarter? Because you don't have the time. I just said 2-3 months. That takes you to March. So I realized that there's a bright guy out there, Bill Ackman from Pershing, and when he talks, I listen. And he was talking March, but I think even he'd go, this is a little stronger than I thought. It's not the date, and I think Bill would tell you that and other people. He's right that the Fed is going to be cutting. And what is happening is we are not going into a recession from everything I'm seeing. We are going into a slowdown. Now, it's semantics. I get it. But why are we calling it a recession? It sounds terrible versus a pullback in the market. And that's really what it is. So if you're on a racetrack, eventually you pause, you slow down. You don't go into a state of collapse where they're taking you to the hospital necessarily, right? We all watch track and field. Not many of those guys go to the hospital after that. So what's happened in the U.S. is everything's better than we thought. Why? That's why we keep hearing the word Goldilocks. I think it's just luck. That's what I think. It's just the stars, everything there. We came out of COVID right. We were leaders in that. We have a good leader in Fed Chair Powell. He's done and steered this ship and not put us into a recession. He's got to fight the inflation. He has to fight that. That's his mandate. Don't take away his job. He's accomplished full employment. So he's got to be restrictive. That means, to me at least, that he's got to keep interest rates tight a bit and hope that the CPI numbers fall so he can then try to get in front of the 8 ball, not behind it, and keep the economy from not seeing everything fall. The reason CPI will fall is less demand, and make sure it doesn't fall too much where he can't turn it. The worst thing in the world is a dive. I was a pilot. You put your plane in a dive, it's a heck of a lot more effort to pull it out of a dive than if you're going up and you point it down. I used to take my son and we would go up like that, and then he'd have his brown bag because I would turn the plane into the dive. And it was a ball to do it, but not good for him. All right. So in the gold market, we've got a lower low, a higher high. Okay. So I look at the market here and I go, uptrend, bias to the upside. Not a trend necessarily, but certainly bias. Same thing on the weekly. So we come back here. This is your monthly. And it's only closes. This is your weekly. They're both in there. Big pullback, if you can get it, back here. What happened, by the way, over this market? What happened this week? Greed. G-R-E-E-D, not Creed from The Fight, which is a great movie. Greed. People went nuts. They were just buying because they believed gold was there. It was going to keep running. Let me give you the secret to trading any market that I teach in my charting course. Take the name off the chart. Trade the chart, not what you think. If you want to trade off what you think, give up the chart and be an investor. You're either a trader or you're an investor. The worst is the combination. because it means every trade you make that goes bad, you keep as an investment. I have friends galore that have done that. Over time in the stock market, it's treated them well, but they're rich and they're able to absorb those losses and ride it out. And then they'll call me over, look at how my portfolio is doing. I'm going, you want me to show how long you bought that? When? And you could have bought other things? They don't want to hear that. This is just how it is. I get it. Well, what happened here is pretty simple. You have a market that, number one, wasn't trending. It went on a run. It took off from this 1935 level to 2130, went up $200 an ounce. Boom! Just ran. Then it got up to, and you'll see it in a minute, it held, by the way, the 18-day average, and it's a classic bull trend. It's the short-term average, the 18-week, is over the 100-week, which is over the 200. And this all began when you got some crossovers back here. Market came down, challenged the 200, and that was the end of the game. This was your washout month in October, and the market went up. As it was a washout month in October, it was just a washout month this week. This week. You're already down $150 from the top, approximately. Here's what they were buying over, the upper Bollinger Band. What do you hear me constantly telling you here? You never buy over it. Why? It's an algorithm designed to keep the market trading within the bands 95% of the time. That doesn't mean you can't buy this band. You're going to go through some heat. I think you can buy better, and it can't go higher. But you're on borrowed time. It's not going to stay over that. In fact, there's finite amount of days in a row that it does it. I teach that in my subscriber videos. I only give you partial things here. This is the feeder into my subscription business. Well, you can see what it's doing right there. Okay. And you got overbought. I'm waiting for the pullback here. I want those people to still feel more pain that bought that. And let it come down and give us a chart pattern to come in with. I want to get higher lows, higher highs, and then look for the 2060 area, something within reason on it. The gold-silver ratio turned in favor of what? Silver or gold? This is the wrong color. This should be gold. Because the higher the number goes, what happens? You need more ounces of silver. My mistake. I thought I changed it. I don't know why it didn't take. In silver, it's the same thing. If you bought over the Bollinger Band, shame on you. What do you do against Bollinger Bands, highs or lows? If you're bullish, you take some money off the table at the top. If you're bearish, you take some money off the table at the bottom, and you never don't do it. Do you hear that rule? And you never don't do it. Now, Bollinger Bands aren't entry signals. They're exit signals, always. Copper market. Feel like a broken record here. Okay. I'm pointing. If you don't get it, I don't know what you're looking at. That was the end. But there's nothing there right now. This market's looking for direction. And in the dollar, here's what you're at. Which school of thought do we go with? And the dollar has to decide this right now. The dollar has to decide, or let me turn it around. The European Central Bank is probably going to move before the U.S. dollar. The logic is there after today's numbers. That could change if CPI is super weak. You heard what I said, not strong. Super weak come Tuesday, because that'd be the first sign something in the economy is crumbling for the Fed, and they may then open their eyes and go, okay, this is a one-off on the employment. We got something else happening. But if you get a neutral to strong CPI, the Fed stays a little bit longer and fights the inflation. Everything's falling apart in Europe already. So it's a question now of when they lower everything. And all you need to do is look at how German factory orders have gone. You're seeing other parts. You're seeing employment being hurt. The good news is energy prices are down, but they're not core inflation. Food prices are down a bit. They're not core inflation. Housing in the UK, which unfortunately is not an EU member, has been slipping. So that is good news. But I think that they might be first. So is that a reason to buy the euro? Because when you're the first, it means you've got the patient on the table. You're injecting him. He's getting his vitamins, his penicillin, whatever the heck he needs to get better, or she needs to get better, right? if we keep just out there, do we fall or go up because of that? You're in an interesting spot. The market's got to make a decision, and it hasn't. I'm going to write about that. I'm going to keep you up on it. It'll be all week long that I'm going to hone in on that with you. It'll be in my newsletter that you can get if you haven't tried it. All you need to do is go to our website. You get a free trial. We keep a list of if you've tried it. And after you've tried it, no, you can't try it again. And the reason is you either support us or you don't support us. I'm not in the business that I have to have 50 million free trials out there like so many firms used to do. When they got smart, they realized a good subscriber is one who's paying to keep you going so you can keep putting out the good information. Choose from what you want there. It's all free, no credit cards. Move your cursor to the top. You can go to irapstein.com and sign up there, and I'll see you come Monday. Take care.